Welcome back, everybody, to the Bigfoot Live. Today, I want to again talk about the up and coming financial crisis that's coming, and I'm going to show you, and I'm going to kind of paint a little bit more picture of things that have been happening, things that have been going on, and um, um, and the reason why I'm bringing this out is because, like I said, if you don't have money, it's harder to have health and fitness because it's harder to buy the extra things, the extra food, the extra supplements, the extra everything. We want to be able to put food on the table, have health, and so you got to prepare for what's coming. And in my opinion, this is coming. It's coming fast. So if you guys, when you're watching this, please share this video with others so the word gets out of what is coming up ahead, what we are looking at, what is going to be happening in the next within easy probably next month to maybe a year. So it's coming quick. So just so you know, just gonna give you some information here, just a few of these articles, and like I said, I'm gonna paint a picture to show you kind of what's coming. This one was on Fox Business, recession indicator with perfect track record flashing red. Okay. So this is talking about the yield curve is blaring a recession warning. The spread between the U.S. 2-year and 10-year yields on Wednesday turned negative for the first time since 2007. Such a development has occurred ahead of each and every U.S. recession of the last 50 years, sometimes leading as much as 24 months. So what this is saying is when we end up seeing this 2-year and 10-year kind of flip on those yields on the spread, that it's basically telling us that a recession is coming. So, and you basically have 24 months from, which was this? It was just a few days ago. This was published on August 14th. So 2 days ago. And I think this was either the 14th or the 13th that this actually happened. So within 2 years, this is going to happen, that we will be in a full-on recession. And this recession is going to be extremely ugly. This one is not going to be a good one. Okay, if you depend on equities to tell you whether you are entering into a recession, you did not do well. For example, October, November of 2006, exactly 1 year before the Great Recession began, which was the 2008, which was ridiculously bad, which they were able to save it. The 2 and 10 yields inverted. Equities did well in the first half of 2008 when we were in a recession, and oil prices hit a peak in May of 2008 when we were very much in the recession. And then oil dropped out right after that, which was crazy. Okay, I'm going to show you this here. Here's another article. This one is on Market Watch. The U.S. Treasury 2 to 10-year yields curve inverted, and that means stocks are on borrowed time, says BAML. I'll just kind of read a little bit of this. The U.S. 2-year Treasury note yield traded above the 10-year note yield for the first time in over a decade early Wednesday, reinforcing recession worries, which shows you that there's no confidence in the 10-year. Okay, the flattening of the main measure of the U.S. Treasury yield curve already spelled trouble for stock market investors that have been on the back foot from escalating geopolitical concerns and simmering trade tensions. Analyst at Bank of America Merrill Lynch said in a Tuesday note ahead of the inversion. The inversion of the main measure of the yield curve, or a negative spread between short-term and long-term yields, means a recession indicator is flashing red. The equity market is on borrowed time after the yield curve inverts. And it goes about this. An inverted yield curve often serves a prelude to a recession because it indicates when monetarily policy and financial conditions are too tight for the broader economic. A yield curve inversion along the 2 and 10-year spread has come before the last 7 recessions. Still, the widely varying lag time between inversion and an economic downturn makes it difficult to say if an inverted curve point to an imminent slowdown in growth. I'm not going to keep reading this one, but what I'm showing you, though, is that it's coming. Like this recession is coming. This one's not just going to be a little recession because when this starts hitting and Deutsche Bank starts going under, then it's going to be an implosion. So it's going to be real ugly. This is going to be a big one. This is going to make 2008 recession, the Great Recession, as that one recalled it, look like child's play. Okay, this is interesting, okay? The reason why I'm bringing this up, because this is something that's been going on for so many years. And this is the silver manipulation. Silver, it's actually precious metals have been manipulated, not just silver. And they've been doing this with their computer programs and being able to keep the prices down based on them with their manipulations and stuff like that. Well, if you would have said this, so many years ago, everybody would have laughed at you and said, that's not true. They can't manipulate silver. They can't manipulate the stock market. They can't manipulate this. They can't. Yeah, they do it, and they've been doing it for a lot of years. And one of the things that we should have seen silver continually rising and gold continually rising for the last so many years. Because once the dollar, as it's always devaluating and dollars dying, silver and gold should always be increasing in price. And we don't see that. We've never seen that, and that it doesn't make any sense, because the weaker your dollar gets, the more expensive silver gets. So, and that is a very plain way to look at the precious metals. So they have been keeping the silver down, keeping the silver prices down, and how ex-JP Morgan silver traders' guilty plea could boost manipulation claim against the bank. So they got caught. JP Morgan, and I think even Deutsche Bank, got caught rigging the precious metal market. A previously secret guilty plea by a former commodity trader at JP Morgan Chase, who admitted that he rigged precious metals markets, has drawn the attention of a lawyer who has already accused traders at the national's largest bank of similar conduct. The lawyer David Covell told CNBC he was struck by how much in common his civil case pending in New York federal courts against JP Morgan Chase has with conduct outlined in an ongoing criminal case in Connecticut against John Edmonds. Edmonds, a 36-year-old Brooklyn resident, pleaded guilty in October to fraudulently manipulating the precious metal markets from 2009 to 2015. And then he admitted working with unnamed co-conspirators at his former employer, JP Morgan. The Justice Department made public November 6 when it unsealed the case in U.S. District Court in Connecticut. Edmonds' criminal plea related to spoofing, a certain type of improper trading that has been subject of a broader regulations crackdown on market manipulation since 2008. Okay, so they've been manipulating, they've been keeping it down, and you can read more of that article if you want. Okay, here's another one. Money Metals Exchange, and it says precious metal market rigged state. Precious metal market rigger turns state evidence. Sorry, I can't read today. John Edmonds, a former vice president at JP Morgan Chase Bank, may be headed to prison for cheating clients and investors, but metal investors can hope it won't be before he is done helping federal investors catch the even bigger fish. Edmond pleaded guilty to spoofing precious metal markets hundreds of times with the knowledge and consent of his immediate supervisor last October. So they finally got caught last year, and all this has kind of been going down behind the scenes, not telling everybody what's going on. The court delayed sentencing for those crimes against last week, and that is a very good sign. The move to delay implies that Edmond is still assisting the Department of Justice investigating of other bankers, both with JP Morgan and elsewhere. The second time sentence has been postponed. On the surface, it is starting to look like the case will be a slam dunk. There's a guilty plea from Edmonds and his continued cooperation. Deutsche Bank pleaded guilty to cheating markets in 2016 and turned over a trove of evidence, including hundreds and thousands of documents and recorded phone calls. The CFTC caught Deutsche Bank, UBS, and HSBC spoofing prices in precious metal markets and levied fines in January of this year. Okay. Again, same thing, but you can see how many people are involved. It's huge. Now this one, criminal sentencing of former JP Morgan Chase precious metal traders delayed as federal probe continues. Okay, so what they're saying here is that, I'm just going to read a little bit here. The criminal sentence of former JP Morgan Chase precious metal trader John Edwards has been postponed 6 more months to December. That's this December, as federal investigators continue to probe possible manipulation of metal markets. Okay, so what this is interesting, because once they finally put the crackdown on all of this, they stop all this manipulation, silver is going to go insane. Silver, probably gold, platinum, palladium, they are going to go insane in price, because these precious metals have been manipulated to be as low as they are. Like silver right now, I think is like $17 an ounce. We're gonna see when this manipulation stops, it's gonna go boom, and the gold and silver, and it's gonna be like one day like, why did gold and silver just go up? When that happens, our dollar is going to collapse, because it means, and it will show the world that our dollar is garbage. And when that does, again, it's just going to be a big run on the banks, which I think it's happening right now. We're not really hearing about it. That people are pulling money out of their banks, and they're starting to move into these other more solid investments. And most countries across the world are moving all of their money into gold and silver and other things. So again, this is what we're running into. This is what everything's kind of moving into this direction, and we're heading in for a real hard recession, which is more like a depression. So again, thanks for watching. Share this with your friends, warn them, so we can get the word out. And the reason, like I said, we want to put food on the table. You have kids, you have family, you don't want to be starving. You want to have money for the future. And the question is how do we do that? And silver might be one of those ways. Thanks for watching, guys. Comment, like, and subscribe. And let me know what you think of this video. And I'm gonna keep, like I said, I'm gonna keep pushing these out. I'm gonna keep giving you more information on this upcoming financial crisis.